Hi, Simon Dixon. I'm reporting again from the Institute for Social Banking, and I'm now here with Malcolm Hayday, who's the CEO and founder of Charity Bank. Charity, bank, not two words we often hear together. What's the big idea behind Charity Bank?
The big idea is actually not a very new idea. It's a very old idea of taking banking more back to its roots.
Yeah.
I had been working for a brief period of time with an organisation called the Charities Aid Foundation to explore the whole area of new sources of financing for the charitable sector. Mm-hmm. And we came to the conclusion that with the right type of environment, backing, capacity building, that charities, social enterprises could actually be very responsible borrowers.
Right, okay.
It's just that banks didn't see it that way. Mm-hmm. Because they didn't really want to get to know the size, the nature of the sector, and they felt that if they had to foreclose on a charity, then that would be bad press, so best not to do it.
Okay.
So we were born really out of market failure, because one of the things that we are concerned about is that social enterprises, charities, enterprising not-for-profits, can make a significant impact upon some of the social problems we have in the world today, but they can't do it from volunteer labour alone. They've got to have resources, and those resources need money. And if you starve them of money, you have a problem. Now, historically, there has been philanthropic capital, gifts, donations, grants, but we would argue that those are increasingly constrained, they're increasingly directed, sometimes to where the funder wants the money to go to rather than necessarily where the need is. And by lending money responsibly to those social enterprises that can afford to consider that, we're introducing a new source of unrestricted funding for them.
Okay. What would you say to the critics that would say, we should be giving our money to charity rather than lending our money? What would you say?
I think it's a traditional Quaker view of the world that you earn money with your head and you give away with your heart. What we think about social investing is actually you can do both. And the beauty about investing is two things happen. One is there's a good chance you get your money back, so you can use it again and again and again, so you get the recycling impact. But also there's something about borrowed money that creates a sense of responsibility, whereas sometimes, not always, but sometimes gift money can be taken for granted.
Right.
People expect you to go on giving. You can't necessarily go on giving. And also from a personal impulse, if you think of your assets that you want to give away to charity, that might be quite different from your liquidity that you have, that you're willing to invest in your values and the causes you support, but at some point you need it back. Okay. And we think that there's a bigger multiple ultimately through investing than there is through giving.
So you're saying by lending money to charity, it's attracting funds that otherwise wouldn't have been available if you were simply giving them?
Yeah, definitely.
Okay. Yeah. What's a reasonable amount of interest to charge a charity?
It's a very good question, because if you think about most enterprising charities, the marketplace they're working in is not elastic. They're either providing services to government who is squeezing you on the amount of money that you can actually earn, or you're selling into deprived communities who have not got large amounts of cash to pay for rising prices. Right. So what we did was we really tried to turn it on its head and say, how much money do we need to sustain the bank? How much do we have to pay for our deposits, for our capital, and then add a margin that enables us to cover our costs but not make super profits? Yeah. So we came up with an interest rate of somewhere between 6 and 7%. Now, while interest rates were high, that was cheap. When interest rates came down, you could argue that we suddenly became expensive. But the reality we found was that we were providing loans to organisations who couldn't get money elsewhere. Right. The banks had suddenly disappeared overnight. So while price is important, because we would only want to charge a price that the organisation can afford, it's not the key driver in the decision as to whether the organisation borrows from us or we lend to it.
Okay. And with Charity Bank, let's say, do you have to be a charity to deposit money with the bank, or is it just the other side?
No, anybody can, as long as they pass the Know Your Customer checks,
Okay,
money
yeah.
laundering checks,
Yeah.
anybody can deposit money with us. So we have people who deposit £10 with us. We have one individual who deposits £2 million with us.
Right, okay.
We have some of our ex-borrowers who, I guess, liked what we did and now want to make that opportunity available to new generation borrowers. So they put money back on deposit with us, which we're really pleased about. We have two foundations, the Body Shop Foundation and Share Gift, who both have very properly set aside a rainy day reserve. So if they ever had to close down, the money's there.
Right.
They put that on deposit with us to let it work in furtherance of their values until such time as they ever need it, and hopefully they won't need it.
Okay. So are you mainly dealing with the corporate side, the individuals that are interested? Who's your main depositors?
2,500 private individuals are our main depositors.
Right, okay. Excellent.
And about 100 charities, one building society that's here today, the Ecology Building Society,
Yeah.
and one or two private companies where the principal knows us. We haven't yet tapped, to my great sadness in many ways, the CSR marketplace, because I think it's a no-brainer for a company.
Corporate social responsibility.
Exactly.
Yeah.
To put some of that money with us,
Yeah.
let it work, and the crazy thing is as well, if they give it to us for 5 years, they get a tax relief.
Right, okay.
So it's actually very attractive for them to do it. But because we're not rated, because we're not a big organisation, the finance director seems to tell the CSR guy, no, you can't do it.
Okay, so aside from the corporate social responsibility, knowing that your money is being lent to causes that you care about, is there a side benefit to the amount of return that you could get on something like this? Or?
It's strange. What we're trying to do is to demonstrate that you can get a social return and a reasonable financial return. So right now we're paying 2.5% on our ISA.
Okay.
We have this deposit account, this 5-year deposit account, which is the Community Investment Tax Relief account. If you are a marginal high rate taxpayer, i.e. in the 50% category, then your gross yield on that, guaranteed by the government for the next 5 years, is 10% per annum. Which is unbelievable, really.
Something you can't achieve more often in the...
No, exactly. Our ordinary deposit accounts vary depending upon the term and the amount on deposit. They're not going to be competitive with the highest rate accounts because that's not what we're there to do, because we want to keep everything affordable for the borrower. But what we do, which again the financial code doesn't really understand and doesn't really like, is we would say to you as a depositor, you can have up to this amount of deposit of interest, or you could actually have zero.
Right,
and some depositors believe it's morally wrong to ask for interest given the good that the money is doing. So we have a core of depositors who don't want any interest at all. And that enables us to provide some fixed rate lending to our borrowers on very affordable terms.
Right, okay, so that's a testament to the type of client that's attracted to something
Absolutely,
like Charity Bank.
Yeah.
Excellent. Do you cater for people that in their day-to-day banking? So no. So it's very much money aside for people that really have some money to save.
The market failure we found was an access to finance, and we turned to people, if you like, who want to see their money working differently as the source of that money. Okay.
So what type of company, let's say someone wanted to have an account with their day-to-day finance and they want to put some money aside in Charity Bank, do you have any partners which might deal with the same, have the same kind of values and ethics as you?
They're not formal partners in the sense that they are in formal relationships, but we have done joint activities with Triodos.
Okay.
We've worked with the Ecology Building Society, we've worked with CAF Bank, but CAF Bank only deals with charities. But they might provide the clearing arrangements, the payroll, etc., for a charity, and we provide the lending.
Okay, so hence the reason why you're very much interested in the Institute for Social Banking.
For two reasons. One is those types of partnerships and networks, but also we recognise it's very important to develop the next generation of social bankers.
Yeah.
We're getting much more interest now from the commercial banking sector of people who disillusioned, fed up, some cases quite angry with what the mainstream institutions are doing, and recognise that there is a way of using money for society's benefit rather than for personal benefit.
Yeah. Malcolm, I'm curious about you as a person as well. Some would say it's a pretty amazing move to go out there and create a bank, something that not many people would be able to achieve or even comprehend. Yeah. Let alone combine that with something that's obviously of true value to you, doing good and giving to those organisations that actually need the money. What motivated you to start Charity Bank?
I guess it was one of those strange moments. Back in 1993, I had been self-employed for a couple of years because I'd been a casualty of the early 1990s financial crisis.
Right. Did you come from a banking background?
Yeah, I had been in banking for 20 plus years.
In retail?
Mostly, well, international banking,
okay.
but lending increasingly or involved with small corporate organisations. And in 1993, I had a young daughter growing up, and it was great to be with her at a very formative period in her life. And I guess that made me think about there must be other ways to do things. And I happened to see this advertisement from the Charities Aid Foundation looking for somebody to, as they put it, to come and run a loan service, which was going to be an advisory, brokerage, educational type facility. And it was really, I guess, 3 or 4 of us. There was Michael Brophy, who was the chief executive at the time of Charities Aid Foundation. There was Sir Peter Baldwin, the late Sir Peter Baldwin, who was his chairman and became my chairman.
Right.
And myself, and later Sir Brian Jenkins, who was the next chairman of Charities Aid Foundation. And it was us sort of kicking this around and exploring what the different options were. And I think also going quite early on to the Bank of England, as it was in those days, who was pretty dismissive of the whole idea. They didn't understand how you could have a bank that could also be a charity. Yeah. And was there any a market for all of this? But they gave us the leeway to test the idea.
Right, okay.
And over the next 5 years, I began to draw a small group of people around me. Interestingly, I was talking about this to actually somebody earlier today, that the first 6 of us who all joined the bank were unemployed. we may have been in banking and come back to it, but actually at the time we didn't take anybody out of another job.
So it's forced entrepreneurship.
Exactly. But I think it was forced because we all shared this vision that you could do something. What we didn't know is we were in for almost 10 years of legal argument, disagreements with the regulators. And I think the Bank of England sort of became the Financial Services Authority. And under Howard Davis at that time, they were more open to this idea than they would be today.
Right,
in fact, we're very clear that today you would not be allowed to set up a charity bank.
Wow, okay.
The Charity Commission came from much further back, but once they got it, they were pretty enthusiastic and have been sort of our defender in a way, coming forward.
Amazing.
What we didn't realise was sort of 36 hours before we thought we were going to get the licence, the Inland Revenue put their head up and said, excuse me, charity can't be a bank. So they were about to say no, but I think some fairly fast footwork.
That must have been a fun day when you got that news.
Don't.
So this is after 10 years of regulations and debates and...
In total, yeah.
Yeah, wow.
But fortunately, within 36 hours, they changed their mind.
Yeah.
Because we had a guy, Andrew, now Lord Phillips of Sudbury, who was the lead lawyer for us from Bates, Wells and Braithwaite. And he was very good at explaining to the Revenue, explaining to the Charity Commission exactly why we could be a charity. And the important thing about being a charity was when we were researching this marketplace, and from what I understood of the finance market, the example I always hark back to is Crédit Agricole. Crédit Agricole in France started out providing finance to small farmers and vineyard growers who couldn't access finance elsewhere. And they grew to be the biggest bank in the world. And all of a sudden, if you were a small farmer, you couldn't get credit from Credit Agricole. And so I wanted to have a mechanism that stopped us getting too big and forgetting where our roots were.
Right, okay.
So by being a charity, you have a charitable mission, and you must stick to that. And so, although we are lending larger amounts now to organisations as they grow, we're still lending small amounts of money to the organisations who desperately need it. Because if we move out of that place, very few others are going to be there to help them.
Yeah, that's a really fascinating story. I bet you've had some amazing challenges over the last few years.
Absolutely, and they're going on all the time, because the great thing is, in the sort of post-financial crisis climate, we've grown 26-30%. As people find us, who want to come to us, charities who had...
so no government bailout for you?
Nope, not at all. Charities who had existing relationships with commercial banks suddenly found they're gone. We had one charity ring us up. They were on site to do a development project, and the bank had rung them to say, we've changed our mind, we're not going to give you the money. And you can't do this with community-based organisations who have very vulnerable people very often depending upon that charity being successful. And to play around with people's lives like that is all wrong.
So let me see, are you subject to all the, so you have an ordinary banking license just like any other bank? You're subject to
Basel III, to the Capital Requirements Directive 4 that's coming out of Brussels shortly.
Right.
We have to have the right sort of capital, we have to have all the ratios, and an interesting issue for us, which unfortunately there's nothing we can do about, but we've had to explain to our savers give us their money, or lend us their money, because they want to see it doing good. Because of the new liquidity requirements that are coming out of the post-financial crisis era, I'm not too sure it is post yet, but let's hope, we are having to keep up to 25% of our balance sheet liquid.
Yeah.
So if you're like 25 pence in the pound of every deposit that comes to us, we can't lend to the people we want to lend to and our depositors want us to lend to. But they understand that there's nothing we can do about it. But it's not an efficient use of our capital.
Yeah.
And particularly when you look at the risks in our type of lending, where over the past, well, since the bank started, on an accumulated basis, so this isn't per annum, we have lost less than 0.5% of the loans we've made.
Amazing.
But it's because charities and social enterprises only borrow when they need to, and they think very, very carefully about what they want to do. And we work very carefully with them, and although we don't get paid for it, sometimes the best answer is to say to somebody, no, this isn't the right time for you to borrow money.
Yeah. So it's very much a different paradigm, and recently we've seen big paradigm shifting events with microfinance movements, the financial crisis, realizing how safe the banks have been. It's been really interesting times. We've had some interesting presentations here today. I don't know if you caught one where there was a discussion about the concept that all banks should have to be full reserve banks. I don't know if you've got any opinion on that.
I don't have a completely clear opinion because I haven't read it in detail.
Right,
yet.
okay.
But
I kind of caught you off there.
Yeah, but I think there is an interesting issue, and that's the issue of insurance. Insurance, even in the real economy, is an important part of risk protection. That is leveraging, because the money is not physically there on deposit. So I think that there is a space for leverage in the banking sector as long as it's not abused. And where it's abused is I mean, again, I haven't done the audit trail yet, but everything I read tells me that most of this capital money injection that went into the economies post the disaster has gone into things like hedge funds, it's gone into real estate, it's gone into things that actually have got nothing to do with underlying economic activity. Charity Bank does leverage its shareholders' money by taking a multiple of deposits. But we always lend that money in support of real economic activity. We're not speculating.
Yeah.
And I think that's where there are issues. But as I say, I can see the reason for certain types of insurance products, but I think we've just got out of control with them.
Let me pick your brain a bit about the future. So we've had massive technological innovation recently. We've had the movement of person-to-person lending, the non-bank movement.
Yep.
We've had organizations like PayPal develop person-to-person lending. We've had people choosing alternatives nothing to do with finance and banking, like crowdfunding. Where do you see the whole social banking, charity bank, all this comes together? What's your future vision for, say, 2020?
I think it's pretty exciting. I think one of the things that we have lost, certainly in the UK and the financial sector, is localism. We now have community development finance institutions, and there are 60, 70 of them throughout the UK, but they're very patchy and they're different in their quality. We used to have regional stock exchanges, and one of the things we've been discussing with the forthcoming social stock exchange is, by using technology, could we reintroduce regional social stock exchanges? Could you have regional activity by using technology? As you know, it is intended, although I think the government is still wobbling a bit, that sometime over the next 10 to 11 years, cheques are going to disappear.
Yeah.
Many of our depositors are older, they love cheques, they don't like the internet.
All right, okay.
But interestingly, a lot of them have, if not all of them, have mobile phones. So we're looking quite interestedly at the M-Pesa type technology that's come out of Africa. We've spoken to the guys who actually developed it in Cambridge about whether there's a way that we could use that technology for raising deposits amongst a completely new part of the population, younger people who don't actually want to go and see a bank manager. They want a bit of Skype them and this type of thing.
Yeah.
The other thing that we're also aware of is that it is very expensive, by the way we do lending, to make small loans. And by small, I mean sort of under £35,000. I mean, we probably have to underwrite some of the exposures for, say, the first 6 months while investors got used to what we're actually proposing. But I think the idea of doing peer-to-peer lending, where we get disintermediated by investors, people who want to lend money, maybe £10 at a time, £100 at a time, but collectively to community organisations within their community.
Yeah.
And that seems to me to be quite an interesting opportunity, and will be complementary to the development of community share issues that we're starting to see. Social networking, Twitter, Facebook, etc., are all important marketing and promotional and contact tools for us. Yeah. And they substantially reduce the cost of our communications, which is great. Where it all comes together, I think it's still a bit early to tell, but I think you will see quite different back offices in banking organisations, the ones that exist today. Right. Okay. As in a way, you know, I came into the city in 1972, and half the ground floor of the bank, which is now interestingly a pub, was taken up by this enormous mainframe computer. Yeah. Well, you just don't have that these days. So I think, you know, looking ahead, we're going to have much more mobile, portable technology, which will be great because it means that my relationship managers really can be out in the field, working with these people, with these organisations. And I would love to be in a position where we can send drawdown notices to borrowers over the telephone. They could go into the post office or wherever and deal with the whole application process. And to me, that's embedding it back in those communities. So technology is very much on the radar for you over the next few years? It is, but you know, we're a tiny organisation. There's only 30 of us as staff. So we would have to work with people in that area who can help us through the minefield. Okay. Well, it's been a fascinating interview. Thank you very much for giving us your time, and all the best with Charity Bank. And I look forward to seeing this move forward. Thank you. Thank you.